Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for January 6th, 2019. Let's take a quick look at how the markets finished off on Friday. It was quite a day on Wall Street. The markets absolutely soared after better than expected jobs numbers. They came in at 312,000 new jobs compared to an estimate of 176,000, so much higher than expected. But that wasn't the sole thing, the only thing that got the markets going. What really got the markets going on Friday was the Fed, more specifically comments from the Federal Reserve Chairman Jerome Powell, who came out to say that the Fed will be patient in raising rates and won't hesitate to change its balance sheet reduction plan. Clearly they did it again. They came and saved the day for the markets, and the Dow Industrial Average on Friday soared. It was up 746 points, while the S&P 500 closed higher by 84 points. The Nasdaq was up 275 points, while the Russell was up almost 50 points. So one of its biggest point gains ever, obviously. But I've got another point to make about the Fed in just a moment. Let's finish going through these charts. The bond market retraced sharply here on Friday, and the yield on the 10-year note jumping to 2.67%, while crude futures also moved higher. It was up $1.22 or 2.59%, while gold giving back some of its gains here, down $8.60 or 0.66% on Friday. Obviously, as everyone was very bullish on those comments from Jerome Powell, and the dollar pulling back here on Friday as well. Now, as we move forward, it's pretty clear what the Fed is doing here, stepping in whenever we start to sell off here and trying to save these markets, but they're going to be challenged big time by an event that's just around the corner, and what I'm referring to is earnings season. And as earnings season kicks off, if we start seeing companies report lower than expected numbers or lowering their guidance, similar to what Apple did as a result of the tariffs that have now been out there for a while, I don't think the Fed's going to be able to save this market for long. Once we start seeing a slowdown in earnings, I think that will be the game changer for the Fed. And if they should decide to reintroduce quantitative easing, I think the market's going to read that as a huge negative. So I don't think this is over yet. Certainly, we saw a huge boost for the markets here on Friday. We may see some follow through into tomorrow, but the real test will be earnings, not to mention the overhead resistance levels that still remain for this market. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.